Hello students and welcome to the class of financial markets and institutions. Today we will be understanding the link between money market and monetary policy in India. Okay. So it is important that money market and monetary policy should have a link with each other for the financial development of developing country like India. The Central Bank of India, that is Reserve Bank of India, influence monetary condition through management of liquidity by operating in variety of instruments. So, monetary policy represents objectives and instruments directed towards regulating money supply and the cost and availability of credit in the economy. So, monetary policy looks after the uh, control and regulations of money supply and credit availability in the economy. The monetary policy in India is similar to economic policy because the objectives of monetary policy are not different from those of economic policy. The three major objectives of economic policy in India are growth, price stability, and social justice. The objectives of monetary policy are also price stability and growth. The government of India tries to manipulate its monetary policy through the Reserve Bank of India. So, government of India tries to implement or improve the monetary policy with the help of Reserve Bank of India. The Reserve Bank influences monetary conditions through management of liquidity by operating in variety of instruments such as cash reserve requirements, limit on refinance, administered interest rates, quantitative and qualitative instruments. So, the Reserve Bank of India controls or manipulates monetary policy, and it influences on monetary conditions by managing liquidity with operating money market instruments. So, the cost, availability, and flow of funds come under the direct influence of central bank. So, central bank controls the cost and availability of funds in the economy. But the market price or interest rates are determined by the market forces or on the basis of demand and supply of funds. So, interest rates are not on the basis of monetary policy. Interest rates are not controlled by monetary policy or Reserve Bank of India. Interest rates are changed or fluctuated on the basis of demand and supply of funds in the economy. So, the success of indirect instruments depends upon existence of liquid and efficient money market. So, if the money market is well developed in the economy, then it leads to the success of indirect instruments, and it depends the money market instruments directly depend upon the liquidity position in the economy. Therefore, the Reserve Bank influences monetary conditions by managing liquidity, and the instruments can be categorized as direct and indirect market instruments. So, the money market instruments can be categorized into two categories, that is, direct money market instruments and indirect instruments. So, in an administered or controlled system of money and financial markets, the Reserve Bank directly controls or influences the cost and availability of funds in the economy. The management of liquidity is essentially with direct instruments such as variations in cash reserve requirements, limits on refinance, administered interest rates, and control on credit system. Since 1991, the market environment has been regulated and liberalized. So, more freedom was given in the economy since 1991 because of LPG policy, right? Because of globalization privatization and liberalization. And the objective of monetary policy operations is to make interest rate more flexible and responsive to the economic fundamentals. So the main objective of monetary policy is to control the interest rates and trying to make interest rates more flexible or more adaptive according to the situation in the economy. In such an environment, the Reserve Bank influences monetary conditions through market based instruments, and the success of market based indirect instruments depends upon the existence of liquid and efficient money market. Therefore, money market should be highly liquid and efficient or well working money market. The effectiveness of the monetary policy depends on the market and institutional framework available for transmitting monetary policy impulses. The financial sector in India is still in a state of transition because of ongoing reforms. However, a still growing integration among the different segments of the financial market has been witnessed. So in India, financial sector is growing continuously and there are many improvements made in financial sector in India. Still, the markets do not have adequate depth and liquidity. Still, the market lacks liquidity and it's not well working. As the main objective of monetary policy are price stability and growth, therefore the money market helps in fixing the price or maintaining the price stability in the economy, and money market looks after the availability of cash in the economy. So money market creates liquidity and it creates funds in the economy. Therefore, monetary policy and money market are highly linked, or they are connected with each other and perform with each other, just like money market and monetary policy are like the wheels of a bus or a vehicle. So they operate depending on each other to move the economy. Both are very important. For the well developed economy to exist, both money market and monetary policy are equally important, and both are independent with each other. Therefore, money market supplies funds and monetary policy control those funds for the best and effective use. Clear? So to conclude, money market, the money market, so as we already know, the money market specializes in debt securities that mature in less than 1 year. So money market is a market for short term funds. So money market securities are highly liquid and safe. Therefore, they offer lower return than other securities. So money market offer lower returns, but they are highly safe. The easiest way for individuals to gain access to the money market is, so any individual can access to money market with the help of mutual funds or money market mutual funds. So this is all about money market, and next we will be studying about capital market. Thank you.